Welcome everyone, and thanks for joining us for this episode of Cross Currents, where we discuss policy and economics and the implications for business and investments. I'm Ben Fawcett, Vice President, Canaccord Genuity, and with me is Phillips, Vice Chairman, Canaccord Genuity, and former Finance Minister of Ontario. In today's episode, we'll be discussing a number of topical areas, including Trump's new One Big Bill Act, as well as looking at Carney's early days. So Rod, I think that's a great place to start. It hasn't been reported much and we haven't had a lot of fanfare, but the TSX last week made a new all-time high. And I think that has some interesting signals as far as what's going on in the Canadian economy. Perhaps let's sort of discuss Carney's early days and how things are going and how it's progressing.
I think big picture-wise, Ben, it's been going pretty well. There's always chatter if you look a little bit deeper in the media about issues about staffing and other things. But when you think about it, he's laid out some clear priorities. Unlike the previous prime minister who had voluminous letters for every minister with all of their intentions, he laid out one set of 7 priorities for everybody. Not surprisingly, at the top of that list is the relationship with the United States. But all the other items that he's talked about, whether it's housing, what he wants to do around interprovincial trade barriers, what he's going to do around energy, are laid out underneath fairly clearly. And I think, interested in what you had said about the TSX, there's a sense that at least in the early days, this is a different government that has a different priority, and it's moving from there. And I think that is part of what has encouraged people to be encouraged about Canada. And of course, you might be interesting to hear what you think. It's also always relative on the compared to other jurisdictions and compared to some other places, Canada's looking better right now.
Yeah, no, I think that's a really good point. In some sense, Canada could become a bit of a landing pad if you want to invest or trade with the US, because Europe's probably going to have increased tariffs longer term, same with China, same with Japan. So Canada does still probably end up with favored nation status on a trading standpoint. And I think that's a real opportunity for Canada, not to mention all those other countries won't be trading with the US as much. So that's, again, an opportunity for Canada to trade. There's also a couple of other areas, and I'm very curious of the dynamics that Carney's going to face with a minority government. There are tax cuts. Potentially, do we get any corporate tax cuts? His ability on interprovincial trade to actually enact change. How much, from what we've seen so far, influence is he going to have to get that agenda pushed?
Whenever I ask people to think about government, I say, look at 3 things. Look at what the politician says, and that's usually where most people stop. And frankly, it's why most people are disappointed by government. But you also have to look at how effective is the government going to be at executing what they say they'll do. And the third lens is really what are other people going to say about that and do about that. I think in this case, people are putting a lot of faith right now, and the markets are obviously reflecting that, in his ability to do the sayings he said he's going to do. So whether that's a middle-class tax cut, which will obviously be stimulative, eliminating GST on new homes, first-time home buyers. So I think that has some potential. The sort of energy agenda, which is a longer-term agenda, but just for most people from an economic point of view, the energy and resource agenda just makes sense. In fact, when they look at Canada, especially from outside, they think, well, if you're not doing that, what are you doing, right? And so I think there's a lot of positivity there. In the medium term, I think the question is going to become around execution. First of all, he's got a minority parliament. He's got some premiers that are not so happy, not so much with him, but with the situation. Can he deal with that? And of course, he's got to deal with Donald Trump, and has shown some early skill. But if we think about it, in his first meeting, that was essentially by not talking too much, and getting out of the room okay, which, as it turns out, when you go to visit the West Wing, is actually success if you leave with all your fingers and toes. So I think now the question is going to be, how can this government implement? How can it work with premiers? This is a federal government that at the civil service level hasn't had a lot of pressure to execute. And he's been saying, I want things done, and I want them done now. The other thing I'll say is he's starting to get more refined about some of his commitments. So we've talked about before, by Canada Day, getting rid of interprovincial trade barriers. It turns out by Canada Day, which is now fairly close, he's going to get rid of the federal impediments to interprovincial trade barriers. Might not surprise many people watching, but because they're interprovincial trade barriers, there aren't that many federal impediments. This is largely a function of what provinces do to each other. And frankly, we're seeing some momentum, even just on Friday, where Manitoba has now joined with Ontario and some of the maritime provinces around committing to eliminate these things. So there is progress. His actual ability to drive that is going to be more the bully pulpit than what he can do. And I think that kind of realism about what Mark Carney can do is going to be what shapes the next while, and presumably for the markets, and not just the equity markets, but the bond markets, that's going to shape what we would expect to see for investors and businesses. Yeah,
I think it's interesting you mentioned the bond market. I mean, we can talk about the US bond market, which is a huge sort of signal right now, but even on the Canadian side, what we're seeing is, Bank of Canada is only expected to cut one more time. We've seen, like I said, the TSX strengthen, go to new highs. The Canadian dollar has actually been strengthening versus the US dollar too. So what that sort of indicates is, yes, Carney probably has a lot of challenges to get some of this policy across the line, but at the same time, where we're coming from, it's off a very low base to some extent. And any small wins, even incrementally, I think can really start to move the needle, get that momentum going, get investment back into Canada, retain talent, and that's the path forward.
It makes sense. The net outflows of capital, and including Canadian capital, over the last 5, even 10 years have been so significant. The attraction now of a government that at least says, and as I said, you got to watch what they do, and you've got to watch what people do in response, but now is reacting more to the priorities investors traditionally have seen around resources. Obviously, there's the potential for a new equilibrium generally when it comes to tariffs and what that's going to mean and what that's going to mean to certain industries. And there's some simple math there as to how viable certain businesses are going to be relative to U.S. competitors. But there's also significant realities about what Donald Trump's reshoring is going to, the time that's going to take. And I think that's really a matter for the business community, and certainly businesses understand this about their own business. Investors need to understand this about where they're investing, the real economics of the businesses we're talking about, and how quickly or not certain things can happen. And so I think a lot of that is going to unfold. And we even saw at the end of last week, the potential for a 50% tariff with Europe. Obviously, maybe improves the thesis for Canada. Okay, about being under that umbrella of not suffering from those tariffs. And then we saw by the end of the weekend that's been now delayed for a while. So I think volatility is probably the one thing we can be sure of.
July 8th is probably another big date we need to watch for, because that's when that 90-day suspension on the reciprocal tariffs comes to an end. So as we get to mid-June over the next couple of weeks, watch for a few more bumps in the market to some extent. But I do think it's sort of worth mentioning the tariff standpoint, because a lot does hinge on it from that standpoint. And at this point, we have seen Trump probably, again, talking about his constraints, needs to hit the off-ramp on this, because ultimately, if he sticks to his initial ask on the tariff side globally, we're talking about potential US recession. You've got the midterm elections next year. He could lose the House and Senate in that process, and then he's a lame duck for the last 2 terms. I think there's a number of constraints that you have to consider.
This is where we're also starting to see the underpinnings, his big, beautiful budget bill, and we're starting to see the economic underpinnings. We're seeing the trade deal with the UK with the 10% tariff. So I think it's reasonable to assume that this government, as in the US government's financial plan, includes a tariff line of revenue. That's not going to change. Now, whether that's a 50% tariffs on the EU, which with almost $1 trillion in trade would be a very big number, or gets closer to the 10% tariff, there's going to be a different tariff environment. The potential for that to be differential between areas of strategic importance to the U.S. government makes sense as well. So we're seeing that as a consistent theme, and we're seeing this need for a tariff-driven revenue stream is going to be counteracted by Walmart and these other U.S. retailers now saying we're going to be pushing those costs through. And fundamentally, I think there's going to be, and there is now a debate among economists, is that a transitionary, inflationary? There is going to be an inflationary impact. Of course, some of that is going to be absorbed by the people exporting the product by reducing their prices. Some is going to be absorbed by retailers. But at the end of the day, that is going to flow through to U.S. consumers as well. And if I were speculating now, I'd say that the U.S. government's made a decision that they're willing to see a one-time inflationary impact, as long as it's one time. And the extent to which that is too significant will drive that kind of resentment at the checkout counter that gets back to the politics and gets back to the midterms. So they're balancing that with the need to, in their minds, put the U.S. on a more fiscally reasonable footing. I mean, $37 trillion in debt. Much of it held by foreign bondholders, including Canadians, is not something that this version of the U.S. administration wants to sustain.
Yeah, I think it's an interesting one, actually, if you break down the U.S. finances from that impact and tariffs. For example, if you look at the deficit, let's say roughly $2 trillion a year, the U.S. generates about $5 trillion in revenue, largely taxes. So if you're looking at what they'll generate from tariffs, 100, 200 million is not a big number in the scheme of things. If you look at their spending,
200 billion.
Billion, excuse me, yes. And if you look at the spending, you're talking about 7 trillion a year, 4 billion of which it comes from Medicare, Social Security, and entitlements. So that's really where the heavy lifting is probably going to have to be done at some point.
And this is back to how not to repeat it, but it's what people say they're going to do. They talked about Doge and the savings from Doge, and it was going to be 1 to 2 trillion in savings. As it turns out, that's hard.
Yes.
Right? And now, to Trump's credit, they said they were going to do what they were going to do, not the specifics, but they were going to be cutting government spending. But when you then look at the next layer, it's not as easy as you think. So these things, that is at the end of the day one of the things that tends to moderate governments.
Yeah.
They may have big ambitions, and again, different people, we can agree or disagree with those ambitions, but they get mitigated by the reality of how much can you bring in tariffs, not $1 trillion. As it turns out, right?
Exactly.
At least not, and have a massive negative impact on U.S. consumers.
Yeah. I mean, I think that's a good point to sort of come back to Trump's One Big Beautiful Bill Act, I think, and just your thoughts there. And I mean, where are we in this process as far as legislatively?
So against what many people thought, because of a slim majority in the House of Representatives, that bill passed by one vote, but a win's a win, and that's passed through. It now goes to the Senate, where a number of senators have had a number of criticisms, and if we put aside the criticisms of the Democratic senators because they're in the minority, and we look to the criticisms of people like Rand Paul and others who are going to be influential, they break into really two conflicting categories: those who think the savings aren't enough, and of course the big beautiful budget bill. There's a lot of these.
I believe is the acronym.
But it continues and in fact enhances the Trump tax cuts, adds different numbers, but $4 to $5 trillion of additional expense over the next 10 years, minus, they would say, the benefit of the tariff incomes, but we've already talked about that being in the hundreds of billions,
minimal,
not others, and so bigger spending cuts. Ben, as you pointed out, when you take away entitlements and defense, the amount there is difficult to get at that large deficit. But I think that is where we're seeing from one part of the Republican Party, they need to do more fundamental restructurings and reform of government. Now remember, we're talking over 10 years, so some of these things can be pushed out into out years. And then secondly, some who are very concerned about the impacts of those entitlements. Reforms, particularly on Medicare.
Yes.
And largely that Medicare reform is being phrased as waste and abuse. And it's waste and abuse until it affects you. And so the belief and how that gets marketed and how that gets promoted, and I guess how that actually affects individual Americans is going to be the impact. So this will need to go to the Senate. They will look at it, inevitably make some changes, then would need to be agreed to again by the House of Representatives, and then finally back to Trump earliest sometime in the summer. But keeping in mind back to the tariff and trade implications, no doubt they'll be starting to get more clarity at that stage about how much tariff revenue can come in. But if you think about this like any equation, there's a plug you've got to fill. We know that the tariff bill is probably not going to completely fill that. And that's what's going to end up really defining the U.S. fiscal framework for at least the next couple of years.
I mean, I think if you start looking at the numbers, this can take the annual deficit from just under 2 trillion to potentially closer to 3 trillion over the next decade. So this is definitely going to be additive. There were some cuts, and that was back into the entitlement stuff on Medicaid, potentially 800 billion to $1 trillion in cuts. The other point to make on this is looking at what the market's actually done in this and how the bond markets reacted. When Trump came into power, the bond market actually, interest rates started to rise. And the idea there is that if the US starts spending unsustainably, if you're buying a bond and you're going to own that for 10 years, in 10 years you need to come back and you need the US government to give you your principal back. If you start to worry about their ability to do that, or if you think there's been excessive inflation, that value that you receive 10 years from now is going to be worth less. So you're going to ask for more reward or payment, I suppose, up front, is in higher interest rates. And that's what we saw, is interest rates on the 10-year and 30-year bonds rose. It's interesting actually seeing when this announcement came out, we've seen interest rates continue to move up a little bit, but not excessively at this point. So that's the key area we're watching. And I think part of it was the market knew those tax extensions were going to happen. That was the 2017 tax extensions had to happen. Otherwise, you're effectively taking that stimulus out of the economy, which actually would have really slowed growth. So that was a given. We haven't seen a lot of new tax increases in this bill, actually.
And listen,
tax cuts, excuse me.
I think that excitement around the U.S. economy, if we look at how markets, all markets, the bond markets and the equity markets were performing immediately after Trump was elected, before the trade uncertainty, we saw a lot of optimism.
Yes.
People saying, well, that is going to be net stimulative. It is interesting that by adding the uncertainty relative to the rest of the world's economies, in terms of the discussion of the tariffs, in a way, because all of these things are relative.
Yeah.
If you're not buying U.S. 10 years, you're buying somebody's.
Yeah.
In some ways it equalized, that a little bit, because how confident are you in the euro? How confident are you in the Canadian dollar? As it turns out, relatively confident. But I think, that rebalancing, these are complicated, multivariate questions.
Yes.
And I think a lot of people who have been, really banking on a stable platform, but a stable platform that some could say was fundamentally unsustainable because of levels of the U.S. debt, are now having to recalibrate. And will the enthusiasm in the U.S. economy, because of the tax cuts and because of the reductions of regulation, which is another key part of that, fundamentally mean that those long-term bets on U.S. bonds and equities are going to be good bets? These are the questions people are asking, and finally, that's Trump's, when he goes, as he did last week, to the Middle East and collects, commitments for hundreds and hundreds of billions of dollars investments in America. He's saying, trust me, that this is going to work out well for the United States, and that means the dollar, the bond market, the equity markets are going to be net positive. That will remain to be seen.
Yeah, and I think it is worth mentioning that current debt levels are not excessive if you look at other countries like, say, Japan or even other Western countries. It's just the current rate is the concern. I think that's the bond market is coming in to be a bit of a limiting factor for politicians to say, this is the line in the sand. So we haven't crossed it yet, but this is something you need to be watching from a policy standpoint. Moving forward. Yeah,
so I think in the next weeks and months, we're going to continue to see that balancing out. If we were imagining looking back at this with a little bit of perspective, it wouldn't be surprising that any kind of rebalancing would be, adding volatility to the markets. I think the nature as well of the personalities involved, which, to be fair to the president and to voters, things like the immigration agenda and other agendas that are as much or as equally important. I mean, we tend to look at things from an economics point of view and from a business point of view. Finally, at the end of the day, if the economy is not seen as better, think about why people wanted to vote for Donald Trump that weren't naturally just fans of Donald Trump. They believed the economy was better under his leadership, certainly pre-COVID, than they did under Biden, right? So people are going to expect to start to see that in their lives.
Yeah.
And if they start to see new plants being built, if they start to see new momentum in the economy, if they don't see prices, a one-time price increase in some things, if that's doubling, that might mean one thing. If it's just a little bit of a bump, and that's why I think you see him threatening people like Walmart, essentially trying to affect their decision-making so that they'll absorb a bit more.
Pushing oil prices down, keep gasoline prices down.
Yes. Now we know gasoline prices partly can be down when economic activity starts to go down, but again, for the person who's just making that decision about how's my life, if gas is 20 cents cheaper than it was, it's 20 cents cheaper.
Yeah. No, I think consumer confidence is going to be a key area to watch in the U.S. How has this discussion around tariffs impacted the US consumer. And there are signs of some strength. The US consumer, I always remember too, is incredibly resilient and their balance sheets are pristine. So given half the chance, they like to get out there and spend.
And it's important to remember, what a small percentage of the US GDP is really driven by trade. It is a relatively self-sufficient economy, certainly compared to Canada and a lot of other smaller countries, even heavily traded companies. So that ability to be insulated, and also to be hard to understand,
yes,
because of the internal dynamics as between states, regions of the country, and different groups.
Yeah. I think that's maybe a good point to sort of bring the discussion back to the Canadian economy and what we have coming ahead. One of the other issues that has been coming up is energy independence, or certainly the ability to get our energy resources to Tidewater other than to the US. Updates there?
Listen, I think now we're going to see, with the first legislative sitting, we got the speech from the throne from the King, who's here this week. I think we'll see the layout again of those 7 priorities, which include energy and other critical building of infrastructure. I think so now people will start to see the direction. Of course, we're talking about pipelines, we're talking about potentially refining and processing, we're talking about LNG. We're talking about critical minerals. I think critically we're talking about things like uranium, potash, areas that have strategic importance, not just for Canada, but for the globe. These will be the sorts of things that even the commitments to them are commitments for nothing that's going to happen in the next 5 years that's going to materially, building a pipeline is a big commitment that takes a long time. Opening a mine, building that mine, opening it up and extracting takes a long time. But directionally, people seeing that, over time, Canada is going to be a good investment because we're moving in the right direction on those issues from an investor point of view is what's going to signal the right things. But a lot of that's going to be signaling. In the shorter term, we talked about things like interprovincial trade. Mm-hmm. So the extent that there's on that, I think around housing and general affordability, people are going to be looking for those kinds of signals because those are the things that really affect people's lives. We should always remember in Canada as well, there are other issues, including crime. We saw the Prime Minister talking about eliminating bail provisions and changing bail provisions in the criminal code. So being responsive to those more micro issues, but fundamentally important to Canadians. So I think, I think it's unlikely that the signals won't be the right signals, but then that has to be balanced against the time it's going to take, and frankly, the moving object, which is the relationship with the United States, and what that immediate impact is on really trade-sensitive businesses, particularly in advanced manufacturing, autos, and other places, where the president has put a real target on the back of Canadian jobs. Yeah.
And I think looking at some of those economic signals is important too, as for moving forward from this point. Again, what do Canadian interest rates do, for example? What is the expectation of Bank of Canada's next move and the commentary from them? Also looking at the equity market, some of your more cyclical aspects of the economy. How are the banks performing, which have been turning around? They're a great sort of canary in the coal mine, if you like. Some of the transport, some of the rails, other select consumer discretionary areas. So there are different areas in the Canadian market that you can watch for that signal that we are actually starting to see a benefit.
Yeah, and it's going to be an interesting discussion if the thinking broadly is that Canada is likely, perhaps with Mexico and some other countries, to slip underneath the umbrella of U.S. trade. That obviously comes with opportunities. It's also going to come with costs. And the dynamic, it's going to be very interesting to see how that works on the political dynamic. It is unlikely that Canada will get the benefit of that, for example, without some fairly significant prohibitions about trade relative to China. Because the idea that either Canada or Mexico are just going to be flow-throughs where cheap Chinese goods can come in and then be shipped into the United States, or frankly even exist in a sort of border mentality where people can come across and get their iPhone for half price, versus that U.S.-made iPhone that we're all waiting for.
Cheap Canadian pharmaceuticals is the other one.
Yeah, so I think that is going to be an interesting dynamic and debate. Especially with the newfound sense of Canadian nationalism and patriotism, but then the expectation that there's going to be limitations prospectively put on where else Canada can trade its goods. And so how that trade-off potentially of economic opportunity and independence goes is frankly has been in many ways the history of Canada in terms of where that dialogue lands. And I think for Prime Minister Carney and his government, and for individual premiers, that's going to be an interesting element. They have raised a lot of expectations about elbows up. But at some point, if we're going to continue to trade with the largest economy, in the world, there are likely going to be things that we can't do as well. And simultaneously, you've had a lot of conversation about we need to diversify our trade.
Yeah. Again, it's not about perfection, is it? It's about progress.
Yeah, progress, and I think back to, as we think about the timing, so much of this driven by the U.S.-China conversation and by the politics in the United States, which right now is still very much trending in the president's direction. But there are those limitations. There are the midterms. Yeah.
I think that's a great point. So start wrapping up the discussion. Looking at the coming weeks, anything on your radar that we should be focused on?
Listen, I think we're going to see the G7 in June, and I think that will be an important place on the world stage for the Prime Minister, the President, and the rest of world leaders. We saw the meeting of the G7 finance ministers, which presages the G7 meeting, and there was no talk of tariffs, which was kind of an odd thing, but that was obviously a negotiated point. I think we're going to see this now session of Parliament. So we're going to see how does Mr. Carney do in the legislature and the House? How does the government do in terms of moving agenda items forward, particularly the things they've committed to in the short term? And I think we're going to see an evolution of the provincial dynamics, including this Alberta separatism discussion, and how that advances. And I think the best way to look at that is as one of many pressures, maybe one of the larger ones, but one of many pressures on the Prime Minister and on the government to try to move along the agenda. And in some ways, potentially one that is helpful in terms of dealing with some of the other pressures that the Prime Minister will also face. And then the last, I would say, it is an evolving issue, but we have now seen First Nations issues. First Nations, particularly when it comes to resource development, are going to be critical to what happens in this country. We've seen in Ontario a recent introduction of something called Bill 5, which was really around facilitating rapid development, creating special economic zones, mining regulations. We saw a reaction from some elements of the First Nations community saying, wait a minute, we have a say here. We've seen the Prime Minister, not everybody noticed this, but on his first trips abroad, he went to Britain, he went to France. He also visited First Nations, effectively visiting the 3 founding nations, which even 10 years ago would have been an odd concept. So we've seen sensitivity there. But some of these things have been seen as the barriers in the past. I think, and it's something Canaccord's been very involved with, but First Nations engagement in terms of equity ownership. We as a company, we're the first company to lead a Indigenous majority-owned IPO in this country just over a year ago. So I think how that evolves and how that partnership builds and how you deal. Remember the 3 lenses, right? It's what they say they're going to do. It's how effective they are doing it and how people react. I think the reactions in that case are going to be pretty fundamental to seeing how progress can really be made. And from a market standpoint, we'll be watching, the US equity markets right now probably range bound until we get more clarity as far as, the off-ramp on tariffs, if that is in fact the path. The bond market is obviously critical because that's going to speak to the stress and some of the legislation going through. The businesses everywhere are driven by credit. If you can't borrow, you can't do business. And so that's why all that conversation around the bond markets matters, because underneath it all is the ability of a business generally to borrow, and almost every business needs borrowing.
Exactly. Yeah. Well, great discussion again, Rob, and thank you very much everyone for joining us.